Jack BeVier, just before we're going live here, we were talking about you were speaking at the InvestorFuse meetup in Baltimore with Alex, Ben, and Jonathan about a year ago. I can't believe it's been that long.
Dude, yeah, this has been a very long year. It feels like 10 years ago, but that was a great event. I really enjoyed that. That was a lot of fun.
Yeah,
There's
man, that
a
was
lot of
awesome.
good people there.
That was awesome, man. So Jack is a partner at the Dominion Group. It's a company that Dan talks about a lot as far as someone that he looks up to and someone that we definitely looked up to when we were wholesaling full time in Baltimore. And we wanted to touch base with Jack because he has an amazing resource for you and also just kind of like insight. If any of you guys were on the Corona panel that we had back in spring, when we just brought on some industry leaders from across the country. It was John Martinez, Jack, Blair Halver, Nick Perry. I think Christina Kraus was on there. He gave a lot of good insight and guidance on what investors can do to be successful during these times. It's probably lasted a little bit longer now, and we're kind of in a second or third wave. So I think they'll be able to provide a lot of good insight on that, in addition to a resource he has specifically for you guys that we wanted to share on. But before getting into that, wanted Jack to introduce himself, what the Dominion Group does, and everything he's up to today in the real estate game.
Yeah, awesome. Carlos, thanks so much for having me. Really appreciate it. It's always a pleasure to hang out with you guys and talk shop. So yeah, just as a quick background, my name is Jack BeVier. My company is the Dominion Group. My partner is Fred Lewis. He started the company in 2002. I came in 2007. We've just always focused on distressed single-family real estate. We're located in Baltimore, and over the years, we've grown the rental portfolio. We do flips, and then we have a lending business to pretty active real estate investors nationwide. So locally in Baltimore, we buy about 100 houses a year, fix them up. Everything's vertically integrated. So acquisitions, construction management, property management, marketing, and sales is all in-house. So we've got about 750 rental properties that we own. We're always adding to that. We still do about 100 deals a year, maybe a little bit less this year because of COVID. And then we have the private lending business, which is we lend to basically fix and flip investors nationwide. And real competitive terms, go head to head with any of the big guys, but you get a higher level of service with us. So it's kind of a best of both worlds there. And then, yeah, what Carlos was talking about, I'm really excited about this new rental loan product. It's a 30-year fixed product at bank rates without the bank brain damage. But we'll get into that a little bit more as you know, a little bit later.
Yeah,
So
for
yeah,
sure.
that's kind of my background.
Love that, man. I mean, 750 units is extremely impressive, and want to dive into that a little bit, just kind of hearing about your experience in building that up with Fred and bounce around to different areas across the country, which is pretty cool. And then we can dive into the rental product that you guys have, which is going to be an amazing resource for you guys. So how did you guys, and I know that you joined later on, as you said before, Fred was there before, but would love to hear kind of just unit one all the way through 750, and then maybe talk a little bit about, the systems and processes that you have in place to do that. As you said, everything is integrated, which is impressive to see.
Yeah, sure. So yeah, we definitely had multiple kind of chapters to the growth of that portfolio as we hit different inflection points. We had to really kind of reinvent the company multiple times, just from a systems and processes point of view. Getting from 0 to 5 is a chapter, and then from 5 to 100, you can run with a different set of systems and processes. But like once you get to 100, it breaks. And you have to we had to rebuild everything all over again. And we've tried lots of different approaches. We've done lots of stuff wrong over the years. And just, it's all been really trial and error. There's with the nuances of single family real estate and the local nuances of single family real estate, there's not a lot of just national models that you can look to be like, oh yeah, this is the best way. There's, and as we talk to our peers in other cities, they do stuff different than we do, and it works for them works for them in their location. And that's just a function of their personality types and what they want out of their business, and also the local nuances of how the real estate operates. So, we've done, we've broken it and rebuilt it a bunch of different times over the years. I don't think it's the case that there's one right way. But yeah, that's been a very a challenging business. The building the systems and processes and being very systems and processes oriented is something that has become really kind of like part of the DNA of our culture at the company. Because if you don't have that, you're not going to be able to scale.
Yeah.
Whether you want to scale or not, that's a personal decision, but we wanted to. And so we have always become, we had to become very systems and processes oriented. One of the things that actually I'll mention, because I'm still kind of high on it, that we got introduced to a couple years ago was a personality survey tool called Culture Index. And there's another one called Predictive Index, but we use Culture Index. It comes with some consulting, which we found to be really, really helpful. And I had never had a great way to talk about people and personality types and the differences between people. And as you try to build an organization and put, the right people in the right chairs, talking about what the right people means, was something that we had a lot of challenges with for the first 10 years of the business. Because we didn't have a language to talk about differences in people and the kind of personality differences that we think make that term, the right people, a meaningful one. And so Culture Index was a tool that we used to help us have that vocabulary to talk about people. And it's been seriously a game changer for us in terms of making the right hires the first time on a much higher percentage basis, and having a language to talk about when things are not going well. And, if we need to make changes, what we need to be, what the issues are and what we need to be looking for. Culture Index was kind of gave us that language to be able to have those conversations and have a much better results in the hiring process and the HR process. So anyone who's looking to scale their business, or who has a couple employees and is like, who do I hire next? I think it's a phenomenal tool for that. Really, really helped us a lot. And so we're up to 60. We're up to 63 employees across all the companies, and honestly, I don't think we could do it without a tool like that. So it's been invaluable for us.
Yeah, that's crazy. That's something that helps quantify a qualitative metric or measure, like personality type. And I remember you talk about it before, where you're like, getting mastery in this and the personality, understanding people's personality and stuff. For a lot of people, it sounds like a little, fluffy or woo woo, just like understanding personalities before hiring. But even you and Fred have been completely bought into that now, getting up to 63 employees. That's a pretty large operation, especially for people that are listening to this. Or maybe a 5 to 10 man team and have a solid portfolio. That's just a ton of people, and that's the best way of going about it, is just quantifying people and how they work.
Yeah, and I was the biggest skeptic on that. Like I was the guy who was just like, dude, this is fluffy BS. Like I just don't, personality surveys, like Myers-Briggs, disc profile, whatever. Like, I think I could just I don't know. I didn't put a whole lot of credence in it, but I felt like this program actually took it to several steps above that made it really useful. And so I went from being the biggest skeptic to the biggest proponent of it. So.
Yeah, I love that, man. I fully resonate with the personality test, and just understanding people is big to me. I guess I would want to understand the 63 people that you have. If we want to kind of talk about the whole umbrella of Dominion, just to get a little bit more understanding, and then I kind of want to transition after that to the rental product that you guys have, and kind of just best strategy from a large operator in Baltimore that also has one of the legs in the business nationwide. Just what is the best thing for real estate investors to be doing right now on a few different facets. But let's talk about the different legs that the Dominion Group has.
Yeah, sure. So we have our general contracting business is Dominion Properties. We've got about 15 employees in that, which is just acquisitions, a lot of off-market deals these days because the MLS is super competitive. The courthouse steps is super competitive. And so we're finding a much higher percentage of our deals have to be coming from off-market. So we've had to put kind of horsepower behind that to feed the machine. And it's going well. It's going okay. It's still a very competitive market. We're not you're often in a competitive situation at the kitchen table right now, but we're still finding deals, so it's good. Um, the And then we've got construction management is in house there, so we're really kind of like our own general contractor. So all of the we've got 3 guys on staff who do swing hammers, but it's more of a punch out crew, like punch out and turnovers. Um, and and then we've got project managers, both in the field and in the office, that are really running as the general contractor. Our subs, who are all the ones swinging hammers and hanging drywall. So we've probably got about uh, 25 active projects going at any one time. So that's it's got its own level of coordination. We were running that out of Podio actually for several years, and kind of got that to the point where it was functional, but Podio, like it's anything you want to make it, but it's designed for nothing, So so we ended up switching over to Builder Trend recently as a software to help us with project management there, and that's been really positive. We like that. We like that product a lot, and that helps us keep us organized. And then we've got real estate agents on staff, so we handle all of our sales internally, and obviously accounting's on staff, accounting and finance is on staff. And then so we buy about 100 houses a year. We probably end up keeping about 75 of those as rentals and adding those to the portfolio, and then flipping the other 25. Something that we're finding more recently in the past year or year and a half is that just because the market's so competitive, we're having to do heavier lifting in order to find deals with margin. So we're doing infill new construction for the first time in the past year and a half, and it's actually going really well. But we had to learn some new tricks to find, to find deals that other people weren't bidding on. So we're doing a lot of infill new construction and teardowns right now. We're finding some margin in those deals as well. And then just big rehabs, like adding square footage, popping tops, stuff like that. Cause the easy in and out, patch and paint is finding that deal at a price that's got decent margin to it is extremely difficult right now. So we found that we've had to learn how to do more and become more skilled as a team in order to continue to find deals that have margin in them. But you adapt or die. So we're trying to learn some new tricks. And then the property management side. So we have 750 rental properties, and growing, that we manage internally. So I've got a property management staff at 16 people, and they're full service property management for our rental properties. And then we've got about 125 houses that we sold as turnkey rentals to folks back in the day, maybe like 8-10 years ago, that we continue to manage. So we don't do a whole lot of third-party property management. I think it's a tough business. It's not, it's a tough business to make money in. For us, it's more about controlling our own rental portfolio. So we run it separately. It's got its own staff and P&L and balance sheet, and its own systems and processes. And we do internal billing, billing the rental properties for the property management fee that our property management company charges. So we can evaluate if we're running it, at least well, at least to break even. But for us, it's much more about control than it is about profitably managing rental properties, because that's a tough business, I think. And then the lending business is primarily fix and flip investors nationwide. We do about 60 loans a month, about $20 million a month of originations. So we're kind of just big enough to have a cost of capital that makes us competitive with anybody. So, we can go head to head with the large institutional investors, but because of kind of our DNA as an investor ourselves, a flipper ourselves, and that we're not this, huge company, we've got 26 employees there, that, we can provide a much more Main Street level of service. And so we can close a loan in 2 days. I don't think anyone in the country can close a loan faster than us, literally. So we really like that business. Our core client there is an active fix and flip investor, someone who's doing at least 3 deals a year, and wants somebody who can close on, who they can call on Wednesday and close on Friday. Like that's our fastball.
Sweet.
Um, so that's been like our core lending business. And then kind of pre-COVID, we were offering the rental loan product that a lot of other hard money lenders were offering. The rates were getting pretty good. It was a 30-year loan. The rates were in the fives, which was pretty good. Like not quite bank rates, but still decent money. Um, and that was going well. And it was like a good enough product. We were happy to offer it. We were doing a fair amount of it. But it still wasn't what I was using. When I put my properties hat on, my rental investor hat on, I wasn't borrowing it because we were borrowing money from local banks. And because the rates were better. I mean, that's all it boiled down to, is the rates were better. And so we the service level that we get from the banks is not very good. It's very slow. Nothing happens inside of 30 days. You might, not get an email response in 30 days. And so, that's always made growing a rental portfolio, like that's always made the cash flow management of growing a rental portfolio really difficult. Because you didn't have a predictable exit strategy that you knew was going to happen timely. And so you either had to we've always had to carry a bunch of friends and family money on the balance sheet to help with operating capital to like smooth things out, which, just means we're paying more interest. So for us, like the Holy Grail was what we wanted to do is we wanted to connect kind of bank cost of capital, like bank rates, cost of capital, to hard money service level. And that's been like the Holy Grail for us for years and years and years. We've never been able to do it. And we spent pretty much Fred and I spent most of COVID working on this idea that like coming out of COVID, our books performing, our loan performance is strong. Residential real estate is, everyone is, feels like it's like a safe haven in terms of real estate asset classes. Resi is like a safe place to be right now. And you have these banks that nationwide that have a ton of liquidity right now. They're kind of scared of their own shadow in terms of new originations. They don't know who's going to make it through the next 8 months. And so and at the same time, they've got a ton of liquidity and rates are super, super low. They're borrowing money at nothing. Banks don't even want deposits anymore. They have so much liquidity. And so we wanted to be able to like bridge that and get that bank money on the street efficiently to single family real estate investors, and understanding that they don't have the operations to close a single loan efficiently or quickly, in any way. So that's the idea behind where this product came from. And so I think it's an absolute fastball. I think it's the best product in the market, like hands down. It's 30-year fixed rate, 4.5% interest rate. That's not like from 4.5% interest rate. That's not a teaser rate. Like 4.5 the rate. 70% loan to value. You can do cash outs. No tax returns required. There's no debt to income ratio calculation here. It's based off the DSCR of the property. There's no prepayment penalty. You can you can borrow as an LLC. It is a full recourse loan, so the members of the LLC are going to sign personal guarantees, but that's just like any bank loan. And I can close it in 30 days. We're getting a formal appraisal on everything with the market rent determination form, but you call into our office, you get a quote within 24 hours. You swipe the credit card for the appraisal. Appraisal comes back 2 to 3 weeks later. Title work, as long as title work's ready, we're ready to close a couple days after that. So it's a predictable exit strategy for somebody who's building their rental portfolio, and the rates are right. So I'm super excited about it. I think I know we're going to do a ton of this business. And I just think it's what, anyone who's been doing the BeVier method to grow their rental portfolio, like this is the product for that strategy. So I'm really excited about it.
I absolutely love that, man. You're just bringing the best aspects, both the speed, the investor insight and knowledge, and that level of service makes it a no-brainer. But to me, I mean, the speed is well, the rates are good, as you said, the rates are right, but really just the speed to be able to get something closed just can't be matched by a local bank, it seems. What's the best site or resource for that, Jack, in case somebody wants to pull it up while they're listening? And I'll be sure to have this in the show notes just so you guys can click on it to check it out
Yeah,
while Jack's
yeah.
talking here.
It's rental-loans.com. We were lucky enough to get that URL. So
Oh, the
yeah,
domain there.
www.rental-loans.com. And it's got the summary of the terms on there, and then you can fill out a web form. There's a section in there that says, "How did you hear about us?" and it's a required field. Click on referred, and then type in InvestorFuse into the text box there. And there's a $250 loan processing fee. It's kind of like the only junk fee on there. We'll waive it for anybody who's coming through who puts in InvestorFuse as the referral code, because then we know, you guys heard it here on this podcast, and we'll, as longtime friends of InvestorFuse, we're happy to do that. So yeah, appreciate you guys' support. That's the best way to do an inquiry. You'll get a phone call or an email from one of my sales guys or girls the same day, and they'll be able to get you a quote right away and get the process started.
Sweet, man. Appreciate that. And that's available in all 50 states, except I'm seeing Jersey, New York, and Illinois.
Yeah, Jersey, New York, Illinois, and then I don't have there's a mortgage license in Nevada that we don't have, so that's actually the fourth state that we won't be able to offer it. But yeah, that's just a function of the foreclosure laws. These are relatively small loans, typically, less than a couple $100,000, and so it's tough to lend in that price point in those judicial foreclosure states. But yeah, 46 states, available 46 states nationwide.
Awesome. Well, yeah, guys, check out that link in the show notes, rental-loans.com, and it'll take you to the Dominion Private Lending.com page. A lot of nuggets to pluck out Jack's answer there. I think as far as COVID, where they're doing the new builds and teardowns and stuff like that, you said the term just learning new tricks of the trade, reinventing yourself, adapt or die. That's definitely one of the top things that you guys can be doing as we're getting out of COVID. But also what Jack said too is just the residential real estate, just getting single family rentals is probably one of the safest bets you can play right now, whether you have money that you want to tuck into an asset, or even for you wholesalers, fix and flippers out there, just holding on to some of the deals that you want to cherry pick that you're getting in from your marketing. And this sounds like a fantastic tool to help on the lending side of getting into those deals.
Yeah, absolutely. I mean, I wish, on the real estate side of things, like we wish we could find more deals right now, because I mean, even with all the eviction moratorium and the foreclosure moratoria that have existed, like the delinquency rates on rental real estate have been a lot better than people really feared that they were going to coming out of COVID. And I think, that for me, like my view on it is that I think everyone realizes this is a temporary issue. And it sucks that we're going into this second wave of it right now. And obviously, as the weather gets colder, like, no one's excited about that idea. But, for me, I'm like, come, next June, I think there's a lot of reason for positivity. Because next June, we're going to have vaccines are going to be becoming more widely distributed. And I think we're going to have like this consumer spending boom in like the third quarter of next year that like we've never seen before. Is like everyone goes back to restaurants and goes to shows and movies and concerts and start traveling. Like, everyone's been saving money for like a year and a half, and they're just going to start blowing it. And I think there's just going to be like this massive, like, spike in the economy come third quarter of next year. So like for anybody who's been like, hey, the world's going to end, my view is like there's some, there's certainly a segment I see, like the articles that make me want to click on them, that say like there's this foreclosure wave that's coming that's gonna be like 2008 again. And I just don't see it that way. I just think that this is more temporary. People who are impacted this, like it's literally not their fault. Like they didn't do anything wrong to like have a COVID impact, right? Like it's literally a freaking act of God. And so, and with interest rates as low as they are, I just don't think it makes any economic sense for banks or lenders to foreclose on homeowners or landlords who are having hardships because of COVID. I think it makes sense to kick the can until we've got a vaccine in our arms, and then payments will start coming back in. The idea of waiving a 3%, 4% interest rate for a year, year and a half, maybe even 2 years, versus the probability of loss in a foreclosure process. If I were the lender, and we are the lender on a lot of this stuff, like I wouldn't want to roll the dice and try to like foreclose on a property when somebody was actually just COVID impacted and they'll be going back to work in the spring. So I think that, there's going to be some distress between, over the winter. This winter, I'm not looking forward to it. I think there's going to be some bad stuff that, that actually does happen, and people do get hurt, which is a shame. But I think that, the worst of it is going to be the next 6 months, and then things will start to look a lot better again. And so, if you're waiting for this massive wave of foreclosures that's going to cause this huge drop in real estate values, in residential real estate values, I personally don't think that's happening. Like we paused buying when COVID hit, we paused buying altogether. And I wish I hadn't, because prices really didn't drop and I just missed a bunch of deals. And so I think it's still a great time to own assets. And if anything, COVID's proven that residential real estate's super resilient through, some crazy stuff. So I think it's a great time to keep building a rental portfolio.
Love that. One quick question here before I let you go, Jack. I'm just curious, for when you were chatting a little bit earlier about building the company, you have the project management, construction, all in-house. Do you lean towards advising investors, whether they want to scale or not, to keep that type of stuff in-house to have more control and more profitability?
I think that's more of a personal decision than a business one. If you've got the luxury, or if you got the time and or scale to oversee your own projects, then from a control point of view, from a cost saving point of view, I think it makes sense to run your own job, or at least have a guy on staff who's running your jobs. But a lot of people, have day jobs, and that's, this is what they're doing for retirement. And that's just a luxury they just don't have. And so in that scenario, the hard part is finding the general contractor who's going to do a quality job, and that ain't easy. So managing them well, keeping your thumb on that scenario becomes super, super important. But I don't think that it's like a right way versus a wrong way. I think it's more of everyone's got to play the hand that they're dealt. And for some people, you just need to hire a general contractor, because otherwise you're just going to sit on the sidelines, and you shouldn't do that.
Sure. Yeah, and I definitely understand there's a lot of variables that go into that, but still definitely valuable insight from you there. Cool, man. Well, I appreciate you coming on. I think we're definitely going to have a lot of interest in the loan product, just for, like you said, kind of bringing the best aspects from both ends of the table. And I definitely agree with the positive outlook. I've been saying that since the beginning, that as soon as this is over, I think there's just going to be an influx and just people being grateful to be out, going to concerts, going to sporting events again. I definitely know I'm going to be spending a lot of money on going to sporting events and concerts and stuff once it's all back opened up. And I agree that's going to help out with real estate and investing in the economy in general, which I'm very much looking forward to. And this is a good time to be stacking up some rentals, guys. So check out rentals-loans.com. It's going to take you to the dominionprivatelending.com page. And what's the best, I guess this would be the best place to reach out to someone on your sales team as well. Just fill out this form here, and you guys will get in touch with them.
Yeah, filling out a web form is definitely the most efficient way. We'll get they're waiting for leads to come in, so get a call right away.
Sweet. Jack, appreciate you, man. I'm looking forward to the next time you can speak in person at InvestorFuse event to catch up, get some drinks, hang out and stuff with everybody.
Yeah, absolutely, man. Me too. Appreciate you having me on.
My pleasure, man. Have a great day.
Sounds good. Take it easy, guys.